Okay, so everyone's constantly talking about the chips that train AI, right? But hardly anyone mentions the trunk space. Where does all that persistent synthetic data actually live? Welcome to Earnings Unscripted. Today's August 5th, 2026, and we're looking at Western Digital's fiscal Q4 print, ticker WDC.
And honestly, building the digital trunk space is paying off big time right now. Revenue hit roughly $3.75 billion. That's up 44% year over year, which sailed comfortably past expectations.
Right, which just makes the tape so confusing. The stock had this beautiful, steady climb all spring, but the second the closing bell rang today, it gapped down hard. We're talking a vicious 16% plunge in the extended session. And actually, just a quick aside before anyone gets any wild ideas, this is strictly our own read on things, not financial advice, so please don't bet your rent money trying to catch a falling hard drive knife.
Yeah, trying to trade that aftermarket chop is a quick way to lose your shirt. But look, the sell-off really diverges from the operational story. Their core profitability is surging. Non-GAAP earnings landed at $3.56 a share, and they managed to push their blended pricing per terabyte up into the high teens compared to last year.
Okay, wait, pause for a second. You specifically said non-GAAP earnings. Whenever you flag that, it usually means the official GAAP number is hiding some bizarre accounting trick.
Exactly. The discrepancy here is massive. The headline net income is wildly inflated because they booked a massive mark-to-market gain on their legacy SanDisk shares. So if you just skim the top of the press release, it looks like they discovered oil under the factory.
That's wild. Okay, so you really have to strip that paper gain out to see the actual business. But even looking at the pure hardware side, Irving Tan was pitching this whole physical AI narrative on the call. I really need to know if an autonomous vehicle company is genuinely forcing them to lock in storage supply all the way out to 2031, or if they're just dressing up an old server contract.
It's actually a fundamental shift in how data gets generated. What Tan was outlining is that AI is moving past just software queries. He said, and I'll quote this directly, AI is moving rapidly from merely answering questions to agentic AI that does the work. This transition creates a fundamentally more data-intensive workload and one that is increasingly persistent.
Okay, let me process that. So when they say persistent, they're talking about companies taking their cloud computing and just saving the outputs, like archiving all the chatbot conversations to look at later?
No, it's way bigger than saving chat logs. That's where the autonomous vehicle example comes in. Tan talked about a car company planning their infrastructure for next calendar year. These cars are constantly pulling in real-world video, LiDAR, and sensor telemetry. That's what they call physical AI. And then it gets weirder.
Weirder how?
Because there just isn't, there's not enough raw human video left in the world to reliably advance these driving models. So what these niche infrastructure providers are doing is using their engines to generate synthetic video footage just to feed it back into their own algorithms for reinforcement learning.
Oh, wow. So they're literally dreaming up fake traffic just to practice on.
Pretty much. It's a cyclical process where data literally creates more data. That inherently bloats the size of the original file footprint. Exabyte demand from this one auto customer multiplied several magnitudes just in their recent planning phases. And that's exactly why hyperscalers are terrified of running out of space and are signing these long-term agreements.
Which brings us back to that pricing power. If everyone's desperate to secure capacity, they'll happily lock in a 5-year contract just to guarantee they get the physical drives.
Right, and here's the beautiful part for Western Digital. At the exact same time they're securing these long-term price floors, they're crushing their own manufacturing expenses again. Cost per terabyte dropped about 8% year over year.
So prices go up into the teens and costs drop by 8%. That explains how they stretched that non-GAAP operating margin all the way up to 44.2% this quarter. They're catching the leverage on both ends.
Exactly. The unit economics are singing. But what really stood out to me wasn't just the margin spread. It was how they deployed the cash they're throwing off. They quietly spent $328 million to settle the conversion premium on their 2028 convertible notes.
Wait, slow down. Settle the premium?
So they just bought back debt early to save on the interest payments?
Not quite. No, they paid cash specifically to stop new shares from being created. When those convertible bonds mature, bondholders usually swap them for stock, which obviously waters down everyone else's equity. By handing over cash instead, management explicitly prevented roughly 773,000 new shares from hitting the market.
That seems like a massive signal. A management team doesn't burn that kind of cash fighting dilution unless they firmly believe their own stock is deeply undervalued right now.
Spot on. They're telling you without saying it that giving away equity right now would be incredibly stupid, especially when they have a verified roadmap to start shipping 40 terabyte drives soon.
It really paints a picture of a company operating with total confidence. But if the core execution is this flawless and the underlying data demand is only compounding, why did Wall Street absolutely punish the stock the second the results hit?
It really comes down to sequential paranoia. The street's obsessing over their exabyte shipments, which grew 22% year over year, but that's a bit slower than the prior pace. You get one minor wobble in volume growth and suddenly analysts think the cycle's exhausted.
Right. So they're completely ignoring the fact that a lot of this is just deployment timing for those massive hyperscalers. You put up an incredible print and everyone instantly starts searching for the cliff. But what's the actual signal from management on where demand is heading?
The internal signal's relentlessly bullish. They completely brushed off any volume concerns and guided next quarter's revenue to around $4.1 billion at the midpoint. That's effectively a 45% jump from last year.
Wow. Okay, so a guide like that doesn't sound like a company bracing for a plateau. But wait, if the volume delivery looks a bit lumpy, how do they sustain the profitability? Because that margin expansion we talked about earlier was huge.
Pricing leverage. They're guiding non-GAAP gross margins even higher, somewhere between 55 and 56%. That's frankly just absurd for a hardware supplier. And all that leverage flows straight to the bottom line. They're targeting roughly $4 a share in earnings.
That's wild.
It's the classic disconnect, right? The tape freaks out over one quarterly pacing metric, while they're sitting there quietly pulling more profit out of every single box they ship.
Yeah, and they're playing an entirely different game now. Irving Tan actually noted they're negotiating new volume and pricing contracts right now for calendar 2031.
2031? That's half a decade out. They're locking in storage demand all the way to the end of the decade?
Exactly. The cloud giants are terrified of getting caught without physical space as these physical AI workloads keep compounding. So those customers aren't just buying drives for next month, they're securing guaranteed capacity for the long term.
So if the people actually building the data centers are buying vault space 5 years in advance, we probably shouldn't panic over one afternoon stock chart. I guess we'll just have to watch how smoothly they execute on those next-gen 40 terabyte drives later this year.
Catch you later.
You'll always catch our newest episodes if you just tap follow right there in your app. And to keep everything totally transparent, you should know this whole podcast's an AI experiment, meaning we're synthetic hosts delivering an AI-generated script that turned Western Digital's numbers into audio the very same day. We'd really love to hear what tickers you want to see next, so shoot a message to earningsunscripted@datamadness.ca or hit up the X link in the show notes.
Thanks for spending some time with us.